Good morning and welcome to monthly report presentation, wherein Nirmal retail research team will give 360-degree perspective of the market, what we expect in the coming month, wherein there will be presentation from fundamental outlook on the market and few stocks. Then there will be presentation by technical team, and they will be giving some stocks based on the technical analysis. Then there will be presentation from the derivative, and they will give outlook on the basis of derivative. And then they will be giving few strategy based on the derivative analysis. So to start with, first I'll take up on market outlook on the basis of fundamental. So what we had seen in the recent past is that the market corrected sharply, and the speed of the market of decline was very sharp, and it came down by around 12.5% in just 1.5 month period, which has taken the market to again the lower end of the band, which is continuing. So if you see the band which has been continuing in last 7 months is between 16,000 and 18,000. So that band is there, and it has come on the 16,000 side 3 times in this period of 7 months. And again, it has come near to that. Now the fear is that it may break or it may again bounce back. The consensus view in the market is that the market will bounce back. Then the question comes, will it bounce back, or it will not, or even if it bounce back, then how much? So based on the fundamental, we are trying to analyze these questions, what is likely to happen in the near futures. So if you see fundamental side, the situation this time is a bit different, in the sense fundamentally market has shown sign of deterioration. In the sense, if you see the quarterly result which has come in the recent past, they are not showing good trend. In fact, a lot of results were below expectations or were declining. So lot of results were facing problem of margin pressure, or are seeing lower sales growth in the volume terms. So the problem is that apart from market coming down, there is a fundamental reason to the market coming down this time, which were not so prominent in previous decline. So and apart from that, if you see, already we are there in 2 months of the Q1, that is first quarter, which is also not indicating that any great improvement has happened or is likely to happen in the near future. So situation, in fact, on the other hand, has further deteriorated in Q1. So fundamentally, if we see, results are not supporting the market at current point of time. Even if we see the other reason why the market was getting a lot of support in the previous 1.5 years or 2 years, was a lot of liquidity was available in the market internationally as well. So that liquidity is also taking U-turn, in the sense earlier the Fed was pushing in a lot of liquidity into the market. Now they want to shuck it out from the market. And the key reason for that is they are a lot more concerned about inflation. Inflation was moving up, but Fed was assuming that it is more of a transitory, and then it will cool off automatically. But because of the recent event and geopolitical event, or even the continuous and disruption in supply and all, that situation got expectation of that situation got changed. And now central bank across the world expect that the inflation is lasting, and need to be taken action against that. And as such, every central bank has done quite negative on inflation and are in hurry to bring it down. And that is that is pulling out a lot of liquidity from the system. So bringing down inflation in the sense means what? You want to slow down the demand. And if suppose demand is slow down, then automatically growth in the economy will also slow down. So another reason of liquidity is also not in favor of the market to support it. The other side of the coin is that the key concern for the inflation is what? The key concern what we see is the energy prices. Energy prices in the sense crude oil prices, coal prices and gas prices. If suppose these prices come off very sharply, like crude which was there at around $60-70, now it at around $115. Then coal which was at $80 is now at over $300. So similar is the case with gas as well. So all these prices which are skyrocketing are putting a lot of pressure on the production cost of the companies. So see, a lot of thing manufacturing require all these energy. And once the energy prices are so high, then automatically that get translated into other products as well. So if suppose there is a resolution to Russia and Ukraine war, and some sort of arrangement comes out of this war situation and things cool off, then automatically all these energy prices will cool off very significantly immediately. Though energy prices were running a bit higher even before this war also, but post this war, the situation has exuberated. And I give you example, coal was running at around $150, but now it is at $300, so which is unsustainable. So even if it cool off to $150 and all, then things become manageable. And situation can start improving. But at these prices, it becomes very difficult for situation to manage. So this is what the one need to depend on the event, like Ukraine and Russia war, when it will die down or when it will close, or will it continue for another 3, 6 or whatever may be the period. So if suppose it continues, then we don't have respite, because whatever the action is being taken by the central government, that is only one side of action, that is they are trying to reduce the demand, but supply is not being improved. And supply will take a lot of time to come back to support all these things. So in this situation, when the war will continue, situations are not likely to improve very soon. And if suppose there is a resolution to this war, then the situation will change overnight. And so in that case, one to keep eye open for what is the situation at this geopolitical tensions. One keep to be watchful every time. And if the market gets sense that there is a possibility of resolution in the coming period, then situation, the market will start showing that in the prices also. So in absence of that, what we see that one need to be very cautious in this market, and bounce back, if it comes, then also it will not be very lasting. Only thing is that the participation of retail and HNI is very high. That's why we are seeing bounce back in the previous time also very sharp. And this time also there could be reasonably good bounce back if the participation, because of the high participation by retail and HNI. So overall view is we need to be very cautious in this market. And since fundamentals are not supporting and results are not likely to show improvement in near term, And Nifty range, what we expect in the coming period should be around 15,600 to 16,700. So this is from me. Now I request Jehan to talk about the company.
Good afternoon, everyone. So the first stock we are recommending is Ashok Leyland, because we think that in today's environment, stocks which are doing well, performing well, and despite of many macro headwinds, are still delivering good results which are above expectations. So we feel market will support those kind of stocks, and they will outperform even in a range bound market. Why Ashok Leyland? Firstly, there is a very strong industry tailwind, and this company being a pure proxy play on the revival in commercial vehicle industry. If we see the domestic medium and heavy commercial vehicle volumes, they bottomed out in FY21 at 1,60,000 units. If we compare to the previous peak, which was 2 years before that, in FY19, the volumes were touching almost 4 lakhs. So we have seen a big decline of almost 60% in a couple of years. And if we look at this 1,60,000 unit in FY21, this was the same as what we saw in FY04, which is almost 18 years back. So this is the kind of destruction that was seen because of COVID and various other reasons of axle norms changing and economy not doing well. But if we see last year or so, the rebound has been very sharp, and we think that sector outlook has been improving because of some 4-5 strong factors. First one being obviously a very low base. And so from that low base, it becomes very easy to grow. Pick up in infrastructure and real estate sectors. So we have seen real estate sector doing very well. In last 1.5 year, there had been a lot of stamp duty cuts, and many states propped up this sector. Infrastructure all through the slowdown has been good because of the focus of the government and higher spending on infrastructure. Also, recently, with a lot of liquidity from RBI, the availability of finance was easier, and many NBFCs could start lending. And one of the most important things is the fleet utilization and the fleet operators' profitability. So, despite the recent rise in diesel and CNG prices, the fleet operators' profitability is intact, even in the most recent months. So that is a encouraging sign that if they will make money, only then they will invest and expand their own fleets. So and the last point is the replacement cycle in the M&HCV fleet. If we see, that is now almost touching 10 years in FY22. In the last 2 decades, we have seen that whenever this figure moves closer to the 9-10 years kind of replacement mark, then there is a good replacement demand coming in future years. Now coming to specifically Ashok Leyland growth drivers, this was about the industry, but within Ashok Leyland, we feel market share in last 11 quarters has been continuously rising. It was at 30.6% in Q4 FY22. And we feel a couple of factors going forward will see that the company continues to gain market share. First one being that Ashok Leyland is the largest player in the bus segment. And if we look at the bus volumes, they are also at just 1/4 of what they were in pre-COVID times. So FY22 volumes was just 1/4, and there is a big room for this again going back to pre-COVID levels, as schools and offices have now been regularizing. Second point which can increase market share is that almost 20% of total CV sales are now coming from the CNG segment. And Ashok Leyland was rather a late entrant in the CNG vehicles. However, currently it has 2 CNG models, and in 1 or 2 months it will be launching 4 more models. So once it is able to plug in the product gaps which it had on the CNG model side, then definitely this market share increase will further gain in momentum. And so based on this, we think uh, Ashok Leyland will deliver volume growth of 30% CAGR over next 2 years, and we will see margins expanding from 4% to over 9% by FY24. And this will mainly be led by operating leverage. Stock is currently trading at 9.5 times FY24 EV EBITDA. If we adjust for the value of Hinduja Leyland Finance, which is below the historical average of which has been around 12 to 15 times EV EBITDA. So, based on the expansion in ROC and high growth visibility, we have valued the company at 12 times FY24 EV EBITDA at 140 rupees plus the value of its subsidiary NBFC at 30 rupees, so totaling to 170 rupees per share. That's it from my side. Thank you.
So we are presenting
Yeah,
Britannia
then
today as the
Runjan.
other stock.
Runjan, your voice is very low.
Sir, is it better?
No, it's still low.
Uh, Hello? Sir, I'll try some other method. By the time, why don't we go ahead with technical, and I'll try to see if I can change that.
Yeah. So should we take up technical first?
Yes, sir. Do that, and I'll just try to add on.
Sir,
Yeah,
I think,
Jehan?
sir, Runjun's voice is fine, sir. I mean, people can
Fine?
hear if
Okay,
they,
okay.
yeah.
Yeah, okay, then I'm not able to get it properly.
Should
Okay.
I go ahead?
Yeah, go ahead.
Yeah, go ahead.
Okay, thank you so much. So we are presenting the Britannia as the second stock. I think there's some still people who can't hear me. Can you just say in the chat, probably people who can hear me? Jihan, is it okay or not?
Yeah, it is fine. I can hear you.
Okay, sure. I'm going ahead. Yeah, sure. I'll do that, sir. So the second idea is the Britannia. So Britannia is a well-known name in the FMCG space. Why we are presenting today Britannia? It's a first of all, it's a large cap company, and second, we have seen that because of the volume concerns, this FMCG stock has not been performing in the past some time, and we have seen some time correction in that. Similarly, for Britannia, we have seen that the stock has not moved up much and the time correction has happened. However, we believe that from here onwards also, uh, the company is very good portfolio stock. The company is able to gain market share in such a market also with improved profitability. Since the time Mr. Varun Berry has joined the company, that is January 2013, the company has seen various initiatives and able to improve its profitability. The cost base has actually, the cost percentage or cost base has actually come down. And this is kind of a ninth consecutive year we have seen the company is able to gain market share. Under the Mr. Berry's leadership, we have seen that the company has came up with various innovative products in biscuits, be it croissant with it, or be in cakes. So that innovation products now started yielding good numbers and now contributes 5% of the overall revenues, which is an encouraging trend for the company. Like I said, the other businesses, bakery, dairy, they're also doing very well in that. Bakery has always been a pain point for the company. However, now they have reached a good scale and crossed 500 crore mark recently. The management has also given an aspirational target of 2000 crore in next 5 years. That is 4 times in next 5 years. So, which is very good and very encouraging. And we have seen that the company is not like over promising and under delivering kind of a management. So we can take some of this, that this would be can be seen in the number. Bakery is also shown high double-digit growth with consistent healthy margin, which is in bread and rusk, which is their main bakery businesses, and also for the croissant, which they have recently launched. The company faced initial teething in stabilizing the product. Now they have overcome that, and recently they did pilot launch in South, which they got good response, and now planning to do the Pan India launch of Crozio, which is something an innovative product because we have not seen that coming in the packet so available till now. Uh, the company is also investing in manufacturing plants, and the overall capex they said for FY23 to be 650 to 700 crores, wherein they are investing in three manufacturing plants for to have a backward integration so that they have a better uh, hold on the whole supply chain. As I was talking about the valuation, the stock has actually corrected in recent past, and it is now trading its below 5 year average, which is the forward multiple. So from that point of view, we like this company, and we believe that this is something a good stock and should be buy on dips, and can be keep in your portfolio for a long term also. Thank you.
I'll request technical team to take up.
Yes, sir.
Yes, sir.
Good afternoon, all of you. See, yesterday, last 2 to 3 weeks, we already mentioned that Nifty trading in a range, and that range is comes around 16,400 and downside 15,700. Already Nifty yesterday break that important level and close above that important level, that is 16,340, 370, and we expect further momentums comes around above Nifty if breaks 16,400 is closing basis. Then next immediate resistance place around upside around 16,800 and 16,600, and we expect Nifty moving towards this range. If Nifty managed to sustain June month above 16,800, then we expect further momentum in above 17,000 and 17,400 in upside. Downside immediate support place around 16,100. Below 16,100, next immediate support place around 15,700 and 600 at downside. And technically, Nifty yesterday managed to close above 20 DMA and moving towards the long-term moving average. So we expect positive in first 2 week. We expect positive momentum if Nifty managed to sustain mid of June above 16,800. Then we expect further momentum towards 17,000. Bank Nifty also looks positive at current level. We already see the positive momentum in Bank Nifty, and Bank Nifty managed to close above the important level, that is 35,000, and close above that yesterday close above that important level. To expect positive momentum in banking stock. Towards upside, first target where it will become around 36,000 and 36,400 in upside. Support place around 35,000 and 34,700 at downside. To expect positive momentum to continue in Bank Nifty. And Nifty, we also looking in Nifty IT index also already trading in oversold zone. To we expect the positive momentum in IT stock in coming few trading session. Stock specific, we take first stock in LTTS in IT sector. We see the positive diversion in stock. You can also see the chart. There is a price go for down, but RSI managed to sustain that previous low. Then we expect the positive momentum, and also showing the crossover positive and oversold zone. We expect the positive momentum in LTTS. So next slide, LTTS. The first stock is LTTS. We recommend buy call in this stock because in technically there is showing the positive diversion in this chart. So we expect the sharp positive momentum in this stock. Is stock trading the important level in oversold zone, and RSI also showing the positive crossover in this chart. We expect positive momentum in LTTS, and upside we expect first target towards the 38 40 and 3900 in upside. and support around place around first support is place around 3350, to you can buy at that level also, and keep a stop loss at 3200 in current levels. So we expect positive momentum in LTTS, to buy at CMP also around 3448. Next stock is Hero Moto. We already see last 3 to 2 week in Hero Moto, that is showing the positive momentum and also trading the long term moving average, that is 100 and 200, and also break the downward trend lines last week. To expect positive momentum in Hero Moto, and upside target, first target is comes around 3150, and second one is 3200 in upside. So buy about 2730 to 20 level, and add on near the support level is 2600. So you can also add on that level also, and keep a stop loss 25 20. To expect both stock and auto stock also looks positive at current level. So you can also buy Hero Motors current level. And in IT sector, the our first choice is LTTS in buy side. That's it for technical. Derivative can carry.
Yeah, thank you, Vikas. Good morning, everyone. So overall, the roller position which took place from the derivative front in the June series was like we are seeing from last 1 to 2 months. There is a lot of selling being witnessed from the higher levels in the market. But as per current scenario, we are seeing that the positions which took place as per the rollover, mostly the rollover position took place was from the bank nifty banking stocks and the market-wide stocks. As we are seeing that the market-wide rollover and the Bank Nifty rollover was higher than its 3 month average, while the Nifty rollover was it's lower than its 3 month average. Currently, the way and the market expectation which we are expecting is like the Nifty rollover and the Nifty OI portions was quite lower, so we might witness the momentum and the range which we are seeing from the market in last 1 and 1.5 month is likely to get broken in this June series. While we are seeing the two major factor is PCROI and India VIX. PCROI in May series has almost came at a low of around 0.63 level, which was the lowest in last 1.5 years. So currently PCR was trading quite lower in the May series, which was in the range of 0.60 to 1.20 levels. So currently from last two trading session, we are seeing that the PCROI is quietly sustaining above one level. So currently there is a support from PCR, but India VIX, which is still trading about 20 level, and Nifty from past 1 week we are seeing is almost in a discounted level. So currently, as per the whole scenario and as per the whole rollover position with the derivative data front, we are seeing that once if Nifty comes into premium and India VIX goes below 18 level, then we might witness a pullback strongly in the market. While from last two trading session, the major positive factor which we are seeing in the market is that Nifty has taken a major support around 15,700 and 600 level, and it has strongly got stable above 16,200 level. So the next resistance level for the Nifty would be 16,400 level. Once if in next weekly series, if Nifty manages to get stable above 16,400 level, then the next possible upward movement would be for Nifty would be around 16,800 to 17,000 level, where highest OI positions are getting added up. Currently, the position as per the OI position is like in the range of 16,400 to 15,600 level, and in whole May series we have witnessed the sell off from the resistance zone and a strong pullback from the supportive of 15,700 levels. While from the roll positions, we are expecting in this series, the June series, we have seen many stocks which are seeing very low OI positions getting added up and rollovers are getting strongly on the June series. From that selective, we are seeing from the sectors like auto sector, banking sector, and finance sector. These three sectors have seen major role of positions getting added up for the June series. So we are expecting auto, banking, and finance sector to see strong momentum in first half of the June series. while the specific stock from the auto counters and for banking and finance counters is HDFC Life, ICICI Bank, Hero Motor, and M&M. This 5 to 6 counter looks strongly positive for the June series, and new positions can be added up in these counters. While on the negative front, we are seeing a FMCG counter and energy counter are seeing to be some sort of a negative front as per the rollover position. So we might witness some sort of negativity in this FMCG and energy counter. So currently the stock looks negative for coming trading sessions would be Titan, Asian Paint, Oro Pharma, and NTPC. This four counter looks negative, but these four counters are also trading at the strong supportive levels. Once the supportive levels got broken for these counters, then we might witness the further sell off in these counters. That's it from the derivative outlook. So now we will shift towards the derivative strategy. Overall, this time the strategy which we have selected for the Nifty would be the same strategy which we are giving from past many months, and the probability we are seeing in this strategy is like almost getting a 10 out of 9 times in a good profitable zone. So this time also we will come into with the same strategy, long triangle strategy. Almost we are witnessing in every month that the premium amount has quietly doubled in all the months. So we are making a good profit in this strategy. So we will again come up with the same strategy. So the strategy would be like we will purchase a 9th June expiry, 16,500 call and 16,100 put. The almost the premium for this both strike would be around 310 points. The target would be 500 points and the stop loss we will keep at 220 level. The reason behind this strategy, as mentioned, that Nifty is in the range of 16,400 to 15,600 level, and there are quite high possible chances in June series that the range gets broken, and almost in last two trading session, as we are seeing, OI positions are completely getting shifted upward towards 16,800 to 17,000 strikes. So this is the first point which we will add up to the strategy, which will get beneficial for the strategy to get a long move in the market. While second point is India Wix. India Wix is trading on the higher level, so volatility is likely to remain higher if we seem to market to get at any point. We will make profit in this strategy because in almost in if you look at the May series, there are daily basis we are seeing that the Nifty is giving 150 200 point movement in intraday levels. So currently any move around to 300 400 point in any side we will make profit in this strategy. So you should create this strategy of the 9th June second weekly expiry, 16,500 call and 16,100 put. Both strike need to be bought around the premium of 300 rupees for the target of 500 rupees. The second strategy which will be coming up would be from the auto front. As I mentioned previously that the auto counters has seen nice rollover positions. From that selective auto counter, we are recommending M&M. The strategy which we will give on M&M would be bull call spread. While in yesterday trading session, we have seen that the M&M have witnessed a very strong breakout on the long-term front and from the short-term front also. While the OI positions which you are seeing in the M&M is like from 950 call to 1500 strike, there is almost positions are getting shifted on the higher level, and almost put rider positions are getting added up while the call rider positions are getting liquidated. This means that the support is getting placed in the M&M counter on the lower end, while the positions which were higher, which were making resistance, are completely getting shifted and the positions are getting liquidated. So currently the view for the M&M from the derivative perspective looks very strong, while we are seeing that the IVs on the call side is getting added strongly around 960 to 1000 strikes. When the IVs get added up at the near strike, it means that the call buyers are getting generated in these counters. So that is also major positive factor for this counter. So the strategy on this counter would be bull call spread. In this strategy, you need to buy 960 call at 40.5 rupees, and you need to sell 1050 call strike at 13 rupees. the total outflow for this premium would be 27.5 rupees. That would be also your maximum loss for this strategy. If a stock goes below 10%, 20% also, then your maximum loss would be 27.5 points only. The target you need to keep in this strategy would be 62.5 points. That is also your major maximum profit. While the stop loss would become around 12 rupees. Once if stock goes below 12 rupees premium amount of both the strikes, then you need to get exit and book losses. But currently, as per the scenario and as per the derivative data front, we expect the stock to see buying momentum in first half of the June series only. So that's it from the derivative front. We will take over the questions.
Yeah, I'll request you to all to put up your question in chat box, uh, and we'll try to answer the questions as it comes. Also specify you need a view from fundamental or technical. That also, if you can specify, then it will be great for us. I'll take up a question on steel, which has come, that is Tata Steel and SAIL. We had seen sharp correction in steel prices, steel shares, mainly on account of the action taken by the government. The correction seems to be very sharp and can see some bounce back. What we are seeing now is that because of this action, uh, total production of India is uh, which is exported is around 13 million ton, which get exported to the international market. And if we take the world production, it works out to only 1% of the total production. So 1% of the production is going out, uh, which may or may not impact the prices in the international market. If suppose because of this action, the prices in the international market inch up, then we will see follow-up from Indian market also. In the spot market, post this action, what we had seen that the prices has corrected by around 4 to 5% already. What we see that going forward from here, the prices decline, which people had expected because of this action of around 10%, that may not come. The decline of 4 to 5% can sustain. And because there is a very hefty increase in the cost of production because of the coking coal. So what we see that the decline which has happened in the steel stock is sharp, and we may see some bounce back because of that. But what to do with when the bounce back comes? So one should wait for the bounce back, and once the bounce back comes, one should try to exit in these stocks. See, this is the commodity stock and works on cycle. We had seen steel prices bottoming at around 40,000 and then moving up to almost around 75,000, and now it is around 65,000. So it's a cyclical commodity, and based on the cycle, one should invest. It is not good time to invest for a long term trading perspective. It's a different thing. You should not invest in a sector which is commodity and prices are at peak. So try to use the bounce back to reduce your position.
There is a question on Dixon. Somebody is holding from 4,500 levels. Basically, fundamentally, on the business side, the developments continue to remain healthy, and company will grow in excess of 30% for next couple of years. But the issue in the near term has been that there is some period of lag between increase in raw material prices and them being able to pass on the price increase to the OEM customers. So because of that, we have seen that margin pressure has been there since last 2-3 quarters. So we feel even this quarter there could be some margin compression in quarter 4. Result is due, I think, on Monday. But I would say that if at all there is a decline in margin and the stock comes down, then that will be an opportunity to enter at current level of 33,000-3,400 rupees. I think there is nothing to lose, and in fact, on the business visibility side, that remains very strong. So if at all there is a negative surprise, then one should use that opportunity to add on to it more.
So we'll take a question on McDowell, AP Capital, and PNB. Technically, we have seen a sharp selling pressure into the MACD, and from the oversold zone, it's just showing us some sign of a reversal. So short pullback rally can be seen into this particular counter, which might take a stock towards 800 to 830 levels on the higher side. Whereas on the downside, 750 will act as a crucial support level. So we are just witnessing a pullback rally, but not a major long positions can be initiated at the current market price. Coming towards the AB Capital, this particular counter is as of now trading below all the important moving averages. So which gives us some sort of a cautious sign. But yes, definitely since the market is showing a pullback rally, so majorly all the stocks which are just trading near the oversold zone are showing some sort of a pullbacks rally. So such kind of a rally we are witnessing in this stock as well. And this pullback rally is likely to be continued towards 107 to 110 levels on the upside. So just if any pullback rally is witnessed up to the 110 levels, you can use it for the booking the profit purpose into the AB Capital. Coming towards the PNB, looking towards the PNB chart, we are just witnessing a very tight range bound trading sessions from the last 6 to 7 trading sessions between the 30 to 26 levels. So as long as it trades between this mentioned range, we are not going to witness a clear breakout on the either side. Once the stock manages to give a breakout of 31 levels on the closing basis, then definitely the rally can be seen on the upside towards to 34 to 35 levels. But currently, as of now, it is in the no trading zone. So those who are having any long positions, they can hold out, but maintain the strict stop loss of a 28 rupees on the downside. And if any pullback rally can be witnessed up to the 34, just book your profits.
Runjun?
Somebody has asked about its opinion on DVs despite posting good results. So yeah, the company posted good results, and we had seen that the stock corrected around 30% post that. The reason for is that this time the company didn't give any guidance in terms of the sales growth, because as the results were good, people were expecting that these numbers are not sustainable. Reason being, this time they had the benefit from the COVID drugs. So that being not be the case in FY23, people were not people were concerned about the sustainability. Though the company said they are have good order book and good visibility, they didn't give any specific guidance going forward, and they were also highlighted few cost inflation concerns which might impact the numbers. However, in the long run, the company has said that we would be maintaining 40% EBITDA margins, but that enough was not the substantial enough for the for the people to get confidence on the stock. So, having said that, we believe that from the long term point of view, this is a good stock. It's a good management pedigree, and we have seen good growth and good margins from the company. So, we would recommend that the people should buy this decline or this correction as a buying opportunity from the long term point of view. Thank you.
Sir, I take it two question. That is view on Apollo Hospital and L&T. See, Apollo Hospital looks positive at current level. Already, this stock is retraced more than 50% in 33% in upside. Do we expect we expect some bounce back towards 40 to 41 50 range, and to yesterday we see that stock trading the above range and close important level above important level, that is 3800. To expect positive momentum in Apollo Hospital, next immediate target place around 4150, 4200, and support place around 3570 at downside. So those have position, they can take it at this level and keep a stop loss 3570 and for target for 4200 in upside. Second one is the LNT, Larsen Toubro. Larsen Toubro also trading sideways momentum. Next immediate resistance place around 1642. If LNT goes above this range, then we expect further momentum towards 200 DMA around some 1780, 1719 in upside. So we expect above, if breaks 1650 range, then we expect positive momentum in LNT. Otherwise, trading within the range, that is the range, it comes around downside 1570 and 1550, and the upside range is 1640. Above 1640, then technically looks positive at current level.
So there are a lot of questions on IT sector and companies. So we had seen sharp corrections in IT stock, mainly on account of global concern on the growth. The expectation is that the US growth will slow down substantially in the coming period. And up till now, management of all the IT company has indicated that this year will be very good and will see similar type of growth for IT sector in this year as well. If you see the historical growth before FY22 was at around less than 10%. Some companies were reporting anywhere between 7 to 10%, or large companies. That is core growth of those companies. And in the last FY22, because of the extraordinary demand which came on account of digitalization and the revival of the US economy, the growth went up to anywhere between 17, 18, and some company even over 20% also. So that growth is likely to continue even in FY22. But thereafter, if the US economy slow down and there is a restrictions on the budget of the companies in FY20 next year, that is 24, then the growth will again taper off in the coming period. Meanwhile, because of the high growth, the multiple of all these companies got expanded substantially. Somewhere Infosys was trading at around 17, 18 times 1 year forward. That got went up to as high as 28, 29 times. And now has corrected to somewhere around 20, 21, 22 for FY24. So valuation wise, it has corrected, but not fully and not yet came to pre-COVID level. But looking at the near-term growth perspective, these valuations, what we feel is reasonable and can sustain these valuations. Now, valuation corrections are, we don't see happening in the coming period. Only thing is growth, how it come back. Whether it's sustained or in next year, what is the feeling of the growth? Anyhow, the company will keep on growing. If they are not growing at 17, 20%, then they will grow at 12, 13, 14%. So what we see that at current point of time, it's a good opportunity for short term and we can see some bounce back. Only thing is Q1, most of the company will give salary hike, and as such, this quarter result may not be so great from the margin perspective, but yeah, growth will be visible in this quarter. So what we see that stocks which has declined substantially can see some bounce back. And one can look to buy at current price for short term. And even if someone want to accumulate the stock at this level for very long term, say 2 year and all, that also can be done at current price. So overall direction looks positive for IT companies. So what we see that the whatever the correction was supposed to come has already come on account of valuation. Now the point is the visibility on growth is not yet clear. Jain, if you can talk about Federal Bank or any other.
Yeah. Federal Bank has been one of the few mid-cap banks where asset quality has been consistently good, and slippage ratio also one of the lowest in the banking industry. But the issue remains on the net interest margin front, because of higher exposure to corporate loans, which is almost at close to 37-38% mix. So that is not giving them enough margins. Overall, we feel stock has been bank has been consistent with ROA of around 1% even in these bad times. But going forward, the increase in ROA will be very gradual and slow. So we feel from a re-rating perspective, stock can move from one-time price to book to 1.5 times, but beyond that, one should not expect. So one should not expect like the ROE should transform over next few years into a kind of high quality bank, but it's a decent re-rating candidate.
And also SBI, if you can talk.
Yeah. So SBI result have been consistently good this quarter. On the operating side, it was slightly disappointing because of higher OPEX. But otherwise, on asset quality front, result continues to remain good. And we feel apart from the overall pressure on the banking sector as a whole, we feel SBI and private sector banks like HDFC Bank and ICICI Bank, all these three should deliver good returns in the long term. So one should focus on accumulating all these stocks.
So I'm taking three stock, that is NTPC, NLCL India, and ITC. See, NTPC trading the near the support zone around 50 DM, and that comes around 149, and trading above that level. If NTPC managed to sustain this level, then we expect positive momentum and upside. Next immediate resistance place around 156. Above 156, next target it will becomes around 164. But below 148 level, then it will be retraced towards 142. So those want to take a position, they wait for breakout, that is 156, and below 148 it will be down towards 140, 143 level. NCL India also looks positive technically at current level also, and is trading near the support zone, that is the 72 to 74 is a major support zone for this stock, and trade above this important level to expect towards momentum. Is first target is 85 and 86 in upside, and keep a stop loss 72. ITC in weekly chart show the positive, and we remain a positive in ITC. To upside target, first target is the 282 and above 282. Next target is the 294, and support place around 258 downside.
Yeah. So there is also question on other PSU banks. So apart from SBI, last quarter we saw that Canara, Bank of Baroda in Q3 delivered good performance. But again, we are seeing in Q4 their performance disappointed. Slippages again increased, credit cost increased. So in PSU banks, just stick to SBI. I don't think there is one should venture out into smaller names because their performance remains inconsistent. There is a question on Indostar. So Indostar Capital Finance listed few years back as a CV financier, and recently there was a big write down, and there was some audit issue, and because of which the company had to take a write down whereby the book value declined by 20%, and we saw the stock at a 20% lower circuit, I think last week or before that. So in such a scenario, keep away from such stocks, because still the auditor's report is not out as to the real extent of damage, and so once there is more clarity we can see. But this is not a market for bottom fishing in low quality stocks. Stick to high quality. One more question is on Bharat Dynamics Limited. Although it's a good PSU defense stock in terms of ROE, ROC, it is better than many other defense PSUs. But overall, if we look at on the growth side, since last 2-3 years, the top line and bottom line has been in that same range. So very difficult to take a long-term view and constructive view that they will compound at a very high rate. Yes, even Q4, if we see top line grew by 20% and bottom line around 10-12%, but overall expectation should not be more than 12 to 15% for this kind of a stock.
Yeah, there is a question on Vodafone Idea. So Vodafone Idea, what we see that after the price increase which has happened in recent past and the full benefit of the price increase has come in this fourth quarter, still the cash flow generation is negative for Vodafone Idea. Means they need to infuse additional money into the company. The revival for the revival, they need to have another price increase soon. But what we gather from the other companies like Bharti, that the another price increase could be towards the end of the year. That is maybe in fourth quarter or maybe near the Diwali time. So till that time and how much it will be difficult to gauge what price increase they are targeting. If suppose the price increase is good, then we may see some good bounce back, maybe of around 2-3 rupees in that stock. But equally, it becomes difficult for the company also to manage the liquidity in between. So it's a what we see that it's a more of a struggling stock. So it will remain in a range of 2-3 rupees and will not give you any great return in this stock. Better to switch it to Bharti, mainly on account of if suppose the price increase comes say of from last quarter, their ARPU was 178, and if it moves up to say 200 rupees, then it can give a return of around 30% immediately. Because whatever the profit which will be generated because of the increase in the ARPU will totally flow into the EBITDA and will be accretive to the valuations. So to be on a safer side, it is better to be in steady state and growing stock rather than struggling stock.
So next question I will take on Zydus Life. Zydus Life looks positive as the stock has seen a consolidation and volume addition between the range of 340-370. Currently, as per the chart, we expect the stock to move towards 420-430 levels. So long should be holded with the support of a 360 level. Once if the stocks go close below 360, then only we might witness the sell-off to be continued. But as per current scenario, volume addition is good in last previous series. So hold your long position with the support of and a target of 420 level.
So I will take a question on Segment Scientific and KPIT Tech. Segment from the last 1 year, we are continuously witnessing selling pressure from almost 300 points to the stock has fallen down to almost 107, 108 levels. As of now, the stock is not showing any sign of a reversal. Probably more downside can be seen up to 100 to 95 levels as well on the downsides. So we are not requesting any long positions to build up at the current price. Let the market settle down at the support levels, and once it shows a sign of a reversal, then only we can witness some buying in this particular counter. So it just we are recommending a avoid in this particular stock. Coming towards the KPIT, as of now, from last 2 trading sessions, we are witnessing a pullback rally in this particular stock. It has just touched the 200 DMA, which comes to at around 486 levels, but fails to maintain a positive closing about the same levels. So I will suggest let the stock give the breakout of 486 levels, then only one should initiate a fresh long positions. till the time it doesn't give a breakout, we are not going to witness a fresh long positions at current market levels. So once the stocks manages to give a breakout of 486 level, then we can witness some positive momentum, which might take a stock towards to 520 to 530 levels. So those who are having any long position at the current market price, they can hold on, but maintain the strict stop loss of 465 rupees on a downside. And if any move comes to at around 520, 530 levels, they can book their profits.
So I think we had reached to the end point. So any questions, if remain unanswered, then you can please mail it to us at research@nirmalbang.com. So we'll try to answer those questions over mail. And thank you very much for joining. Hope this session would have added value to your investment. Thank you very much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.